Hey followers, thank you for coming back to my channel, Martin Day Trades, and I am Martin Gonzalez. Today I have a very insightful, special video for you guys. What it is I got out of my drawdown and I'm in profits. I want to show you guys my metrics today. I want to do a back testing session and I want to journal all with you guys so you guys can see what I mean by keeping losses small, winners small, and large winners only. And I'll give you an example of a large loss, which inhibited, or I'm not even sure if that's the right word, but it actually, I came back from it, but knowing that I took a bigger loss than I needed to could have added to my profit, which next week when I get a payout, I would be getting a little bit more on my payout, but I gave back that profit on that losing day. Now, what I want to do is just show you guys that, hey, losing is a part of the process. Even if you do have one bad day, it'll just take you a little longer to get back those profits. And actually, you could make it back faster than you think. I had two really good winning days back to back, which actually caused me to be in profit. One of those days, I moved my take profit a little lower than what I anticipated. I wanted to have a 350 point move. I ended up doing like a 280 point move, something like that. And it actually 240 point move, something like that, because I wanted a TP7 and I ended up getting a TP 4.8, 4.7. Now let's go to the charts and I'll show you guys my metrics. I'm going to do a back testing session with you guys to show you guys why back testing is important, looking for those levels and building confidence with taking trades at those levels, and then to just journal, show you guys it's important to journal so that you can, at the end of the month or end of the week, every 2 weeks, go through your journal, go through each day and just kind of see, because back testing is going to help you, but actually just flipping through images is also going to help you as well. So let's go to the charts. Okay guys, so we have here is Monday's price action. We see that Monday gapped down, and what we can do here is say, hey, let's anticipate. Now I did lose on Monday. I took a short and I was break even on the short, and then I moved that break even trade to original stop loss because I didn't want to take a loss, and which caused me to take an additional L that I did not need, just because I wanted to not lose. Now let's go ahead and do our markup. So we have Asian session high, Asian session low, London low, London high, and previous day low, okay? Now we're just gonna, it is 8:15, so what we're gonna do is, this is a 5-minute bars. It is 9:05, 9:10, 9:15, 9:20. Okay, so we can see that there was at 9:20 a big move higher. It did take that London high out, which would have been a good time to have gone short. It's close to that previous day high. It's not our time to trade. It's a slightly, we're at 9:20. I just want to see, okay. That would be a nice smooth 1 to 2. We could even target a little lower right there. This is just me thinking out loud, like, okay, well, that London high was indeed, in fact, ran. So it would be a good spot, but it's not our time to trade. Our time to trade is 9:30, so this could technically come down, sweep this London low, and then go higher. So depending on, what you're looking for, you're either gonna be break even or, do something, right? So let's just see what happens with Okay, that's a quick L if someone were to have gone in at that point. That's why we don't trade pre-market, guys. This is why we do not trade pre-market. So that's 925. That's already having push a momentum. You guys can see this, right? So what do we see here? London had a bullish move. So technically what we could do is there was this move and this move downwards. It had this move downwards. So what we could do is put a Fibonacci retracement and see when it would be a good time to get in for a trade. So we're going to wait for this thing to keep going higher and then wait for a 38% or 50% retracement to go long. Okay, so let's go down to the minute. Let's see if it doesn't mess anything up. It is 9:29. Okay, we're going to go 1 minute higher. Okay, so it had this move. It's down at the 38%. This would be a good opportunity to get in for the long. So we're just going to get in. I don't know if there's a 1 hour gap in this area, but what I want to do is get in right at that 509 level, which it tapped in. I would have had a buy limit order. As price came up higher, I would have done a Fibonacci retracement and said, well, price is, it's between 38 and 50%. It's right at this, what level is that? Previous day low. I'll get in for the long there, 50-point stop. Looking for a 1 to 3, right? I like 1 to 2s, but 1 to 3s are 150 points on the Dow Jones and NASDAQ. Easy, right? Easy. So we'll go to, do this. And we're just going to see what happens here, guys. We're at the 1 minute chart. I'll go back to the 5 minute chart. Okay, so you get a better view of price action for the day. We see these right here. It's reacting off of this. We could do a Fibonacci retracement from the previous day high to this low and have a target. I'd say the 50% is a good target. What would that be? Oh, 2.5 TP, but I want to see TP3 right there. So I'm going to zoom in again, and what we're going to do is just watch this thing play out. So it is now 9:30. We're going to go to, oh, it looked like it went a little lower to 44,481, and our entry was at 509. But we see that it's now having a reaction going higher. It's probably 931, 932, 933, a little bit after the market open, because the market open went higher and then it started coming down. So this could be about 10 minutes after the market open. We're going to go 1 bar higher. Okay, at this point, guys, we're moving stop loss to break even. It's already, 100 points in profit essentially. And if this were to come back down, it's probably going to be bearish. But we're looking for a TP3 trade. Go to the next candle. Okay, it's okay. And that would be a perfect trade for the day. So that's why it's important, guys, to wait for the break and retest, because the vol, oh, look at right here, 5 minute chart. This is what I like to see. Fair value gap right there. I could have waited a little longer for after this candle printed at 925 to then have my entry right at the top of that fair value gap, which what I would probably would have done was just get in at the London high, which would have been a 502 entry, which would have been a lot safer. Or I could have went right to the top of that fair value gap, which would have been a 496. Or I could have just targeted the middle of that fair value gap, right there. I think that's about middle, even if it's like right there. 482, but I think 485 would have been solid. 490 would have been like really safe play. 489. So this could have, been a 3.5 depending on your entry, right? Now it's always depending on your entry where your stop loss is. I had it right here, 509. Normally I probably would have waited to the 500 big figure level. Align with that. There, I know there's a fair value gap. I know that this is a Fibonacci retest, because I know that right here, bullish. London was bullish. So we waited for the retest, and then we had that bullish move. Now, I'm not going to wait any longer, guys. I'm just going to go to the 15-minute chart, and what we're going to do is, oh, look at how the reaction is coming back down. I wonder what's going to happen. This is why taking profit's important. Ooh, those candles look nasty. It's holding that Asian session high, but okay, it had its move right there. It's towards the end of the day. It's getting towards the end of the day. This could have been a, right at the 700 level, let's say. Oh, it missed it by a little bit. Let's see if it does tap it though. Nope. Would have been runs. Oh, right there, right before the end of the day. Oh my God. Right there. It would have been a long trade. Oh, this is a 1.4. I would have just been happy with the 1.4. I would have been right there, which would have been hit right here, right? Right there. Okay. Wouldn't have needed to hold that. Especially buying in at 500, getting out at, wait up. That's why my numbers are off. Right there. I would have needed to hold to 700. Okay. Which would have been right there. Okay. 500 to 700. Those are those levels, big figure levels, and they did in fact go to them. So it is 11 minutes. I don't want to hold you guys up too long. So what I want to do is just go back to the 5-minute, and I want to actually, I'm going to open that up. No, 5-minute, because I want to see that break and retest. Right there. And then I see this fair value gap. I'm just going to write 5-minute fair value gap, just so that when I go over my notes, I can kind of see that. And price never came back into this level. So what I want to do is just, okay, that works. Let's see, right, yeah, that works. And it didn't go all the way to the 79%, but I know it needs to come up there. But for the day, this is more than enough. 400, 200 points. I'm only going to start taking TP3 and TP4 trades. Sometimes if I know that it has like a big move or a lot of liquidity that it needs to take, I'll take those 5, 6, and 7s. So I'm going to copy image, go to the dashboard, and I don't know what I did for these days, but what I'm going to do is I'm just going to put the actual move, add note. I did have a losing day. I believe I went short and the move was long. I really need to start not trying to fight the trend and wait for the break and retest. Look for a 5-minute fair value gap or one. I think 15-minute fair value gaps are even solid in the beginning. 15-minute fair value gaps that align with the fib and needs to align with liquidity line and possibly a big figure level. See where the momentum is going and trade and wait to see if price gives a re-entry. Here is the move that actually played out. It is exactly what I just wrote above, and it played out. That's gonna bug me, guys, if I don't fix this. And I'm gonna put this image there, and we're gonna save. Okay, so Mondays is good. We're gonna go forward to Tuesday. 30 minutes. And we're just gonna go forward. This is 5 o'clock, 5:30, 6, 6:30, 7. Okay, 7 o'clock, almost time. We'll go 2 clicks. That is now 8, 8:30. We'll go to the 15-minute chart. It's 8:45, 9. Okay, I'm gonna delete this. And we're just gonna move our liquidity lines. And it did tap that 79% fib level at Asia. So if someone was trading this, I know Top Step, they closed the trade out automatically, but if someone got in right here and said, well, I know it needs to go fill that 800 level, you know, they could have had to take profit. I'm gonna just do this real quick, guys. This could have been an easy like 6.5 trade, especially getting in that fair value gap. Let's just say right there. Going to 50. Yeah, this could have been a nice 6.5. Even if someone wanted it right at 6, you know, that's a solid trade. Even if it wasn't that good on the entry, like right there, that's still pretty good right at that. Okay, we're done with this day, but I just wanted to show you guys what happened. Previous day low or previous day high was right there. Okay, we're gonna delete this now because it already ran through it. And what we're gonna do is do a fib from this low to this high, which it already got to the 30%. So it's kind of choppy here. Delete that, delete this. I'm gonna delete that. Okay. London low was created right there. Asian session low was created right there. And you guys can see there was a reaction. There's been some reactions off this Asian session low, but it always came back to the entry. London high was created right there. Previous day low was right there. And the Asian session high is right there. So let's just bring these out, right? Okay, so I want to just, now we're zoomed in here, guys. We can see some levels. It is 9 o'clock. I hope it doesn't go to 10. It's 9 o'clock, okay? So 9 o'clock had a push down, and you know, there's this fair value gap right here in this level. And I know this is bullish, so technically, you know, someone could wait to the bottom of this fair value gap, which could be like right at the 480, like 488. We'll go to 490. 50-point stop, back to Asian session high. This is almost a TP7 trade. We'll see what happens here, guys, right? It ran that London low. We'll go to the 30-minute. Okay, well, we can see that it can't, we know that it comes down because we looked at the 1 hour, but I wanted to see if there was any fair value gaps. 15-minute chart. we know that it ran this 15-minute fair value gap already. We'll go to the 5-minute chart. Okay, so what we're going to see here is we know what happened at but what we could do is say, hey, it does need a retracement. If it runs this London high, we could go short. To, this 50% level, London low, but 50% is right there. I would say right there. Anything more than that is, good, but I know these things can go to like TP4 most of the time. So let's see on a smaller time frame what happened, but I know that it already went short. But let's see if it does get our entry. Yeah. So you guys can see right there at 9:30, it tapped that London high. That's why it's important. That's why I always say wait for that London high to get, it's going to have a reaction. And we know that it goes, right there. That's a TP4 trade right there, guys. Real quick. London high was ran first and it had an immediate reaction. That's why it's important, guys, to, do this. And we know there could be a reaction right off this, 500 level down here because it has a fair value gap. So if somebody was waiting for this, they could wait for the 500 big figure level to get in. 50-point stop, target Asian session high. It's another, or at least the London high, another 4 to 4, right? So we'll see what happens. If someone wanted to take an extra trade this day, this could be a trade that they could look for. They already made TP4. Let's see if, if their buy limit order gets activated. Right there, boom, it got activated. Let's see if this trade plays out. Ooh, no, they would have TP3. Previous day low. Wow, that was the move. Sheesh. Okay, so I would have been happy right there, but let's say someone wanted to target that previous day low. That's a 1 to 8, guys, and it would have happened, all within, the London session. Even at 8.5 would have been sick right there. 300 levels. So getting in at, 7, the London high, and then targeting that big figure 300 would have been a nice trade. So I'm going to document this. I'm not going to use this because I actually know that it came back into that fair value gap. So now that I'm, analyzing this, I can see, I'm going to go to that 1 hour and just see it broke that previous day low. So technically it could sweep and then have a false break and start going higher, or it can continue trending lower. But we've been so bullish that we do need some form of pullback. So what we can do here is say, okay, well, it could, by the end of the week, come down to 44,000 or 44,200 at least. It's going to trend that way. It's only 160 points from there. Could come a little lower, right? So what we're going to do is, I'm going to document this 15-minute chart. I do want to bring this right there, because what I want is, I'm going to have actually 2 photos. What I want to see is this, copy image, go to the daily journal. We're going to go to Tuesday, add note. We're going to put first photo, image, whatever, shows that price was having a hard time breaking out to the top side, and price needed a retracement on a higher time frame. Okay, we can see that. Okay, I took an L. I'll add more to that. I just needed that right there so I don't. Okay. So what I want to do now is go down to the 5-minute chart, get a closer view, bring this in. Okay, whatever. Okay, so what I want to do is just get to this 5-minute chart and just see how that liquidity was grabbed right at that market open and then had that move lower to that previous day low. Now this is a 1 to 8.5 move, guys, but this is where it's important. See how it needed to run this low, this liquidity line. So you could have had your take profit right at that low, or right at that previous day low, and it would have still been an 8.18 trade, a very good trade. But those are these purple lines, magenta lines. These things need to get ran just a little bit to have a reaction. If it's not going to have a reaction at those points, you're probably going to have an L day. Stay out the market. But this is an important trade. I just wanted to screenshot this, copy image, go down here and be like, and just write the second image was the trade that was the winning trade idea. It had a reaction off the London high. Yeah, off a London high. It rejected it and targeted the previous day low. The move was a solid R to R of 1 to 8 point. We'll just say 2. Okay. Was there a break and retest here, guys? Yes. See how it had this move and then it had to move up to this London low, close to the Asian session low. But what we could have done is, and I want to tell you guys this, if you missed the trade, don't FOMO. Do not FOMO. What you want to do, use a fib, go to that low, and see if it aligns with anything. And it does. So what you could have done is got in at the 38% continuation level. Even 600, right? 600 would have been a solid move. We're going to go to a 50-point stop. And we'll target a 1 to, 1 to, see where 1 to 3 lines, 1 to 4. Even a 1, this would have been a 1 to 6 trade, I believe. Let's see if it goes a little lower. Yeah, this would have been a 1 to 6 if you would have just got in right there, even right at that 38% level. This trade would have finished right there, right at this bar, which is still a great trade, a 1 to 6, guys. Who's complaining? Like, that's a great move. Imagine, putting 2 trades on, having this trade and then having this trade, 8 plus 6, that's a TP14 for the day, or 8 to, yeah, TP14 for the day. Imagine risking 100 to make 1,400 or 1,000 to make 14,000 just because you know when to get in on these zones. And I'm showing you guys this, it happens. So if you missed this first trade, you could have waited for the, it would have taken, what, 5 minutes, 5, 10, 15, 20, 25, between 25 and 30 minutes. So it happened right at, 9:50, 9:55, right before the 10 o'clock move. And then it had this move. You could have got in right here at the retracement level a little bit and then caught this move if you missed, waiting for it. Or you could wait for this move right here as it's coming down. could have got in right at that break of that low, but you probably would have got taken out right here. So waited for a little retracement, you know, could have waited for, put the stop loss at that high, see where the entry would have been. Now I wouldn't, this is not how I trade, but if you wanted the high at the entry right at that high, you could have had an entry right at 44,564 to then catch like a, to that previous day low. You know, this is a 1 to 4.8, even a 1 to 5 would have probably played right there, 1 to 5. So these are these moves, guys. So let's go ahead and do that. I already journaled for Tuesday. We're going to save this. And we're going to go to Wednesday. Add note. Go to Wednesday. We're going to delete this. Delete this. It is now bearish, guys. I believe it's bearish. But we'll see how Asia and London play out. Go to the 30-minute chart. 30-minute bars. Okay, yeah, bearish. See how it rejected this 38% level. So someone could have technically got in right here at 44,000, like 80, 90, whatever. And let's see. Let's lower that a little bit. Yeah, I don't think I would have. It got close to 38%, but it could still keep going lower, fill these other fib levels, right? So we're just going to see what Asia and London, how they play out. So previous day low was right here. London low was right there. We're going to go to the 15-minute chart. We're sitting at 545, 6. We'll go up a couple more clicks. We're at 7, 1, 2, 3, 4. That's 8 o'clock. We're sitting at 8:45, 9. Okay, so we're at 9 o'clock right now, guys. This would be a perfect time to start moving bars in the morning. Asian session low. Well, that wasn't on London low. That was Asian session low. London low seems to have been right there. Okay. Asian session low was right here. I messed up on that one. We're going to move these. Okay, we have the London high, which was created right there. We can see that it started transitioning to the New York pre-market. Previous day high was where this Asian session high is, but the Asian session high was, I think, right there. And then the previous day high will move up here. Bring that up. Bring this back. Okay, so now that we know where our levels are, we can, and then bring this a little bit more this way. Okay, we can actually go to the 5-minute chart and start saying, well, let's see what actually happened here. What's the footprint showing us, right? So we see that this is bullish. We could put a Fibonacci retracement here and see if there's a 15-minute or 5-minute fair value gap at one of these points. I see the 38% continuation level. I see a, this fair value gap here. We could wait for this to come down and then go higher. We could get in right at that fair value gap. Remember, these aren't where the liquidity zones are, but it is, we could, technically get in right at this, fair value gap. 298 would be safe. I would say it's a little under 300, but it's also 300 is like right there. 50-point stop. It might come back up, run this London high to then go short. So my second trade idea is this. So whatever one happens first is probably what I'm going to target. And I'll probably target that London low. Make it a cool 2.5 right there. So 2 trade ideas. We're at the 15-minute chart. We're going to go down to the 5-minute chart. It is 9:10. let's see what happens here, guys. Remember, we can see what, where the footprint went. There's a normal thing called a London continuation or a London reversal, New York reversal. It means New York will come up and have a false break and then have its reversal day, or we'll see this and then have a retracement to have a continuation higher, a London continuation move, right? So what we're gonna do is we're just gonna, okay, it is 925. It's looking like it's gonna be this move that plays out, unless this right here pre-market was the entry, which would have been right at 910, but I'm not trading pre-market, so we're not trading pre-market, okay, guys? I'm a little nervous, but we'll see what happens. Remember, if we get to 50 points in profit on this trade, we're breaking even. Okay, right there, guys, break even. And what I want to do here is show you guys it had a reaction. It's coming back up. It never tapped our entry for this trade, so we're coming back up. We have to be okay. At this point, we have to say break even is okay. And I'm going to show you guys why break even is okay when you're on the wrong side of a trade, because you can, what's another move that could happen? A break and retest. So if this move goes up, we're going to wait for a retest to then go higher, because we know our move was wrong. So we'll see what happens. Oh, baby, there we go. If this can close, they closed bearish. We're in good position here, guys. We are in good position. There we go. Let's go. I didn't get that Asian session low. TP, what would that Asian session low been? A TP7. Oh my God, guys. But, we got that London low, TP5. Guys, I'm literally showing you guys how to trade. Now, if this would have stopped us break even, I would have done a Fibonacci retracement from this low to, let's say, like this high right here. Let's say if it would have came up, I would have said I would have got in for, I don't know. So I say it came up, wherever it came up, right? I would have got in at the 38% continuation level. 50-point stop. In anticipation of it going higher, which then I would have just looked for maybe like a 1 to 2, 1 to 3, because at this point we're getting in a lot higher than the entry that was supposed to have been taken. So this 350 was probably the entry. So 350, 450, 550, that's already 200 points right here, guys. 600, that's 250 points. So I think this would have been a good trade right here, little 2.5 for the day. Now, if I would have gotten in on that entry to, 250, I would have probably targeted, 550 for a 1 to 4 trade. But that's not what happened. This happened, and we caught a 1 to 5. See, guys, I'm back testing with you guys, and this is why I like to really like next week's gonna be great, guys. Next week's gonna be great. Just follow the rules, and if I lose, just understand that it's a done day. But if I'm break even, I'm gonna wait for those break and retest to actually happen so that we can, get in for the right side of the trade. Right there, guys. That would have been risk-free. Okay. So what we're gonna do is go to the daily journal. We're gonna write, I was short on this trade, but I don't think I did get in at the break of London. So I got this move right here, guys, and I exited it right here. This is where, yeah, Asian session. And this is the trade I was looking for, a 1 to 7 trade. So this trade actually played out, and I was supposed to have made a lot more, but I made, right there. What did this show? And I had a 50-point, yeah, so 1/6. I would say that's probably where I had my take profit. Not a bad trade, but I knew that needed to come a little lower and run that 38% because it didn't run it earlier, or run that Asian session low. And then, you know, we could do whatever it wants for the rest of the day. So let's write, I took a winning trade off the sweep of the London high for the short move. I need to keep being patient and setting limit orders to be filled at the liquidity zones, because I know that there will most likely be a reaction. Target the opposite side of the range, and if I take an L, lock out for the rest of the day. But if I take a break-even trade, look for the break and retest to get in on the momentum of the winning side of the trade where the volume is. Okay. We're going to go to Thursday. We're going to add a note. And I'm going to pause this, guys. Okay, I'm back. So what we're going to do is just delete this. I don't know what's going to happen after this, but we're going to go forward in the day. 30-minute. Oh, what the? Dude, there was a reaction right off that 38% fib level. It came lower, went to the 44,000, had the low of 973. We could have got in at the 44,000 to go long. $50-point stop. Targeting London high. That would be, ooh, let's see if this plays out. And it did. Oh my God, guys. This would have been a great, crazy trade. Imagine catching this to this, and then this to this. Oh my God. That's why you could take more than one trade in a day, especially if you caught a 1 to 7. You could risk one, you know, your $100 to then get in for another opposite side of the trade, because there's multiple trades that could happen in the day. There was just a lot of volume that day, right? So where did this align with? There's this fair value gap right there. It's a 30-minute fair value gap. We could go to the hour and see if there's an hour fair value gap. No, but there is that breaker block. I would say, you know, that fair value gap a little earlier on the 30-minute would have been valid. Getting in at that, you know, what is, I thought it was a 30-minute fair value gap. Oh yeah, it was right here. Right there. So the low would have been right at 975. So technically, where did it touch? If it touched 975, that would have been a great entry. Oh, it did. But 900 would have been solid. You know, so wow, I don't even want no. We're going to go to the next day. Had a reaction off it. It's crazy to see these things happen because they happen more often than not. So 30 minutes, we're going to go to past Asia, past London. Well, we're going to use London. We are at 8 o'clock, 8:30. Okay. We're going to go down to the 15-minute chart. 8:45. So previous day high was made right there. And it's already going to try to run that previous day high, which we could take a trade off of, but it's not our time of day, so we're not. Remember, time of day is extremely important. London high is so far right there. Asian session low was right there. It did run that Asian session low. So taking a trade during London, if you're trading London, would have been a good trade to get in right here. Asian session high, I'll move that. London low was then created right there. And previous day low, right, was created way down here. I doubt it's going to come back down lower. But we'll see, right? We'll see. London low, where's that London high? Okay, so we're at the 15-minute. It is now showing 9 o'clock. It had the run of that previous day high, a run of that London high, which is right there. So technically, it's not our time of day, but based off these liquidity zones, it could have a reaction to come lower. We know that this is bullish. We're coming in, we're getting ready to sit at our tables, our trade stations, and we see this fair value gap right here. Could get in right at that, for the long here, if this comes lower, right? Right at that 38% fib level, aligns with in the fair value gap. Why not, right? It's 50-point stop. It's right here. It's not a bad trade idea. And what we could do is say, well, if this is now pushing bullish, where could it go? And rejected that 38%. We're going to delete this, put this, that, and that, right? I would say actually right here, okay? So this is Tuesday. We could look to run the week high, but I think this is the trade that I took. So I think this is the trade that I took on Thursday, winning trade, a 1 to 7, and this actually looks pretty solid. We had this move down here, guys. This right here shows there's a lot of buyers in the market. We show that London had a move. So what we could do is, in anticipation of a London continuation, is just see what's going to happen. Go to the 5-minute, and we'll see what happens. It is 9:10 on the chart, 9:15. It's so close to that move right there. 9:15 is not our time of day, so we're just like, shit, it's not going to give us an entry. Okay, so this is why it's important. Right here, 9:30, Asian session high. I think this would have been solid right here. Oh no, 408 is where I got in. 408. That's crazy work, huh? Let's see why I got in there. I don't remember. I think it was order block. Yeah, I think there was. $15-minute maybe right here. There's a fair value gap, right? I did the this retracement tool. I technically could have got in at that 50% and still would have been good, 425. But I believe, I don't know why I got in. I set a buy limit order right at 408, and I remember it being the bottom of a gap. Yeah. Okay. So as this is coming in, there's the 1 hour fair value gap. It's the top of this candle right here, right? And I set it for the top of that candle, 408. It came down to 405, so 3 points. you know, perfect entry, and then it had a reaction. And this is the trade. Now, remember guys, there's a break and retest. Technically, I could have scaled everything out here and then got in, you know, right at, let's just say, TP6, okay? Let's see if it reaches TP6. If it doesn't, then runs. Okay, so it didn't reach TP6 fully, but it did get to TP5. You know, what if we got to TP? Okay, no, I have it set hard take profit at TP7. And you guys will see something crazy. It took all day, but remember this is a break and retest. So somebody could have got in here to there, 79%, and then got in for this long 50-point stop to then go long to TP7, which would have been another almost close to, let's go to TP6 right there. Okay. It took a while, but it did play out, and then the other trade would have played out. This would have been a 6, 7, 8, 9, 10, 11, 12, like a TP12 day. I gotta start taking these trades, but now that I'm journaling and seeing these trades play out, I don't think I would have been comfortable taking a second entry unless I moved this entry to break even, which I did. And if this would have came down, I would have taken an L and then been break even. So -1 for the day, but the possibility of making TP 7, 8, 9, 10, 11, 12, TP13 really gets me excited. So this, you know, the second trade I didn't put on, but this trade was the trade that I took right at 408, and I had a TP7 trade right there. Great, you guys can see that. Go to the 5-minute chart, and we're gonna just mark this up. Fair value gap was right at the 1 hour fair value gap, which was at the top of this bar. And I just want to write 1 hour fair value gap. Okay, so I got in at the hour fair value gap. I'm going to go down to the 5-minute. And we're just going to scroll in a little bit. And right there. Okay, we have that. It definitely went bonkers. We can go up here. It wanted to target that 79%, and I think it does during Asia, but I'm fully out, you know, at TP7. I could have held it, you know, maybe a little longer to, what is this? TP 7.12. Like it wasn't, no, TP7 is up here, right there. Okay. Right there. And it did go a little higher than but I took the meat of the move, this whole expansion. So I'm gonna just kind of do that. I'm gonna get rid of this 'It was a retracement. It did go to that 50%, but the actual like super entry was that 1 hour fair value gap. I'm actually gonna bottom right. Okay, cool. Move this right there. Previous day, I will go right there. I'm just gonna make this a little cleaner for me. And it did go into that other fair value gap, but that 1 hour lined really nice. That's what I wanted to do. I wanted to move this to 979. Okay, there we go. Now we can see the fib levels. Five-minute chart. Sorry guys for the quiet. I am just trying to make sure when I review my trades, I can see where I put these fibs. Right there to right there. We can see, 9 is right here. So, there's a reality of it being 9:30 being right there. Copy image. And we're going to go to Thursday. Thursday was one of my best trades ever. I caught a R to R of 127. I risked 100 to make 700. The entry was the 1 hour fair value gap, which aligned within the 30-minute fair value gap. This is why trading hour time is so important. 9:30 to about 10 is so important. And there could also be another move which could happen later in the day. This happened at 10:35. 10:30 to 10:35, there was this move that happened. It came into the London high. Could have got a re-entry here to then go higher, caught more points. So let's go back to this fair value gap. Waiting for the New York Open is extremely important, and not taking a pre-market move is dumb as fuck. Do not do that. Just be patient and see where the footprints have been printed and wait for price to get to that entry. If my idea is not valid, wait for price to tell me where it wants to go and wait for a break and retest for a entry into the momentum. Okay. Paste. Okay, cool. Save. Now guys, we're coming to an hour. I have Friday, which was a losing day for me, so I don't really want to. We're gonna do our analysis after that. I was gonna say I don't want to really take too long here, but we're gonna see where the entry was and where the exit was, so that going into next week we can be more prepared. So if we see another similar situation, we can be ready to take that trade. So we're gonna go to the 30-minute candles, and we're just gonna fast forward. We're at 5:30, 6, 6:37, 8, 7:30, 8. Okay. We're going to go to the 15-minute chart and just start kind of slowly going into we're at 8:45, 9. And at 9, we're going to start doing some of our stuff here. We're going to go to Asian session low, which was created right there. London low, which was essentially double bottom. London highs was created right there. Asian session high was created right there. previous day high was created right there, and we can go to previous day low. Get rid of that one. Which was created right there. Okay. Let's get these all aligned. And we're going to move this. It already tapped that 79% fib level, so at this point we could, you know, wait for it to go a little higher, but at this point we don't really exactly know what's going to happen. So that's why waiting for the 5, you know, just you see the London high, London lows. We could wait for this London low to get ran to go higher, or we could just, you know, we're just waiting because right now it's above that London high. So technically I could wait for this, you know, move to get ran 30, 50 point stop to then target London lows. Or what we could do is, you know, at this point it's already been bullish. You know, we could, you know, it ran it had this move, came down lower, started creating lower lows. Market structure, don't forget guys, we could do a Fibonacci and, you know, take it to this 1 to 5 right here, right? We could go, you know, or take it down to the 500 level. Who really knows how far this is going to go? This is a 1 to 7. So depending on what happens, if price starts to fall here, guys, I'll wait for a break. And remember, the break and retest. So we're just going to, what time is that right there? Right, we'll leave it right there. Okay. It is 9:10. So 9:15. Okay, we see bearish momentum. It ran that London high. You know, I'm not taking pre-market trades, but if someone wanted to, they could have gone in right there, right? Okay, it's people are right now thinking, oh man, it's already taken off 9:20. But I'm thinking, hey, it's showing us where it wants to go. Okay, so London high. Oh, there is a big move there. Okay, so what we're gonna do is do a Fibonacci retracement, and the market's showing us exactly where it wants to go. This is what it's called. A lot of people would start selling here or buying, you know, at this point, but is it the right time to actually be doing that, right? So what this is called is a break right here of structure, not a break of structure, but a break of and a retest. So what we could do is technically go like this and, you know, say, hey, price, once it gets to this, you know, once it created this low, we could have said, hey, once it gets to 38%, we're going to go in short, have a sell limit ready, order ready. So we would have got tapped in barely. We can see that right there, guys. I'm going to delete this one. Right? It did tap that 38% level where we wanted to get in. Wow, it doesn't want to. Huh. Crazy how it doesn't give, like, it's either right at that point or right there, right? So we could have said, you know, 688, which it would have tapped 688. We would have been active, and it could still go a little higher. But now at this point, where are we targeting, right? That's a good question. And we did this Fibonacci retracement, and we could target, you know, a 1 to 1.6 is not good enough. So we have to go lower. Let's target the 550 level, which would give us almost a 1 to 3, but we could just make that a 1 to 3. Or we can look for a 1 to 4. Remember, we missed a big part of this move here. So if someone got in, right, you know, at the break of that, you know, level right there, as this happened so fast, this was all pre-market. Remember, we're showing you guys this. So, you know, someone could have, you know, there's just no, like, this is the best. If you didn't get in here, it's I would say not a very good, I would say this is probably max, because already, right, you know, at this break of that London high pre-market, you know, someone got in there, they're almost at 1 to 4. So we'll say 1 to 4 down here, but let's just see what happens. Okay, so that person would have been out the trade unless they were looking for like a TP5. Okay, that person would have definitely already been out. But let's say we had got in right at what we said, 488, right? And we're looking for a 1 to 4. So right now with this this volume for Friday, like I would be like, this is a pretty safe trade. Let's see if it goes any lower, gets us in. Oh, right there, we would have had a 1 to 4 trade that day. Right there. So that's why the break and retest is so important. So like if you see the volume fall, like if your idea is short for the day and you're expecting price to come back to run these London highs and it doesn't, you know, what time is this? 9:15. Right at 9:30, you know, there's this fair value gap. Let's see. 5-minute chart, fair value gap. Okay. That's why 5-minute charts are important too, because it came right into this fair value gap, had this retracement, and someone could have gone in at that 50%, like a sell limit order right at, you know, 9:30. 9:30 hit, you know, someone, it's in this level, someone could have just hit sell, right? Someone could have just hit sell and took this whole move, right? A 1 to 6 would have been plausible for a person who got in at that level. So what I want to do here is just do two different fib levels. Can't really see. I'm gonna do two different charts, okay, guys? We'll do this one second after we do this one, 50% right there. Okay. 5-minute chart. This is exactly what happened. Let's move these closer. Let's see if it goes even lower. I'm just curious at this point. And it does towards the end of the day. If you had a TP7, you probably would have gotten hit. Right there, yeah, you would have. Right before market closed. But yeah, this is the trade. We're gonna move these a little bit closer. It indeed had that reaction. So it's funny because like always backtesting, I do good, and then the actual markets. This is why, you know, just consistency is going to be helpful for you guys. You guys can see that like the more you do this, the more you're going to see that these are playing out. So I want to just screenshot this and we're going to journal it. The actual entry was the London no, it wasn't a London. A little retracement. It was a new pre-market retracement. Pre-market New York retracement for the short. It aligned with the 5-minute fair value gap, and right at 9:30 AM, the move spiked up and immediately spiked down. Next image is for anyone who missed the trade and wanted to get in for the for the break and retest. Let's go ahead and do that one. So we're going to delete this. Well, no, we're going to bring that down to right there, right there. Right there. And we're not taking a 1 to 7. We're taking like a 1 to 6. 1 to 4 would have been valid, or 1 to 5 probably would have been valid. Yeah, 1 to 5. Copy image. We're at an hour and 12 minutes, guys. I got about 3 minutes left. I'm just going to type this in. The next image is for anyone who missed the trade and wanted to get in for the break and retest. It retested the 38% fib retracement level. I don't know, retracement level, and immediately went short. Take profit was a risk to reward of 1 to 5, but a 1 to 4 would have been valid. To that 79% higher time frame fib level. Okay. Paste. Okay. Save. Okay, guys, we journaled. I wanted to show you guys why it's important. This day I crashed out $500. If I would have just even had a $200 loss day, one of my bigger losers that I max out on, that would have been a $300 in savings, which if you go look at my net P&L, add $300 to that, I would be up $678 after about 4 weeks of trading, right? First trade I took was 616, and this Friday was a 718. So we're going to say it was about a month, right? So $300 more to this would have been $678. And let's say I didn't take those other trades, well, the second losers. So this one's 150. So we'll add 50 bucks to this 378. So 425, we'll say 425 plus 100 here, 425, 525 plus that 400. That's $925. And there was another 2 days where I moved my break-even stop loss back to -1, which would have been 925, 1025, 1125. And then I did move my take profit of TP7 down to 4 point something. So we'll say $200, 25 bucks. So 1,125, 1,150, 1,251. Guys, on a perfect month, I probably would have had $1,350 right now. And you guys can see I have 1, 2, 3, 4, 5 winning trades, but this trade was not higher than $200, so it didn't add up to my top step minimum $200 winning day. So I still need one more winning day. I'm gonna look for a TP4 trade, guys. Get me up to $778 around that area, and withdraw about $350. I'm gonna do half, so $360, $370. I'm gonna be actually, let's actually do the math there. So we have, $378.80 plus we're going to look for a TP4, but remember the commissions is $1.48. So let's say I walk away with that. 770 to divide that by 2. I'm going to be looking close to a $388 payout this week. Depending if I get a win right off of Monday and it is a TP4. Now I could, take that loss, and let's say I go to 278.80 and then I catch a TP3, $300, let's say. I'm going to be, withdrawing half, which is $289. It's about $100 less than what I wanted to withdraw, but $289 adds up. It's going to pay for this account, and then going forward, I'm just going to keep trading the way I've been trading, small losses, absolutely, come back another day, and just maxing out my wins, getting TP4s, TP3s, TP5s, sometimes TP6, 7s, possibly 8s, depending on where the volume wants to go, where the liquidity, those magenta lines are. So have faith, guys. Know that if you're on this journey, there's others that are on it with you, just trekking along. There's others that have been in this game a lot longer than you have and already know what I'm teaching you guys, already know how to manage risk, already know how to control their emotions, know how to put the charts away for the day, know how to take a loss and walk away. Top Step X for me, guys, has been a game changer because I'm able to manually lock my account for the whole trading day, which means I can't pull my my phone out during lunch or something and take a trade just because I want to make money because my account is locked out. This has helped me build my discipline as a professional trader, as a disciplined trader, to actually have profit after 4 trading weeks. This next month, guys, I do not intend to lose more than 200, God forbid, right? I don't want to lose more than $100 on a trade, and I don't want to move my break-even stop loss to -1 anymore because I'm going to wait for those break and retest because now I can see it. Before I really couldn't see those break and retest after the 9:30 time. Now I can. So let's say the move goes long and I'm going short, but it moves 50 points and and I move my stop loss to break even and then it goes long. I'm not going to try to keep shorting it. The footprint is printing bullish. The volume is showing bullish. The momentum is showing bullish. What I can only do is do a Fibonacci, keep following that bullish momentum, and as it starts to retrace, say, hey, is there any 5-minute fair value gaps? Is there any liquidity magenta lines? And does it align with a 38 or 50% fib level? 50-point stop. And then from there, remember, it already came back a little bit. So you can't have like a higher risk to reward of 1 to 6, 1 to 7s. I would be looking for 1 to 3s to 1 to 4s on those particular days as your small winners. The days price had came down and let's say you were long and you got in at that optimal trade entry and now you're looking for a 1 to 6, those are your bigger winner days. Now it's an hour and 20 minutes into this video. If you guys watch till the very end, thank you. I appreciate you. What I'm doing is not only for you, but it's also for myself. I am going to make $1,000 days soon. I already had last Thursday I did $700 in a day, but I want to have 4-figure payouts, at least a minimum of $1,000, which means I need to have $2,000 in my net P&L to withdraw $500. Now remember, I need 30 winning days to be able to withdraw the full amount in this account. So which means I have 4 winning days. I need 26 more winning days. It may take the rest of the year. I don't know. But if I, just keep trekking along, I'll be able to have bigger payouts and bigger payouts. My goal is to, as soon as I get my first payout, I want it to be more than, I'm hoping it's more than 300, 388, which is, I already did the math for you guys. If I get that 388 payout, I'm gonna pay myself back. I'm gonna draw up how much I've invested into Top Step X, taking these combines. And my goal is to get another payout by the end of July. That means I need 5 more winning days. So if I catch a winning day on Friday, I still have the rest of next week and close to a whole week the following week to get 5 winning days to get another payout. That is my goal. Just I know I can do it. Now that I see these break and retests, and if I have a break-even day, I'm not going to just shut my computer off. What I'm going to do is give myself an opportunity, a chance to see where the momentum's going to go. Wait for that break, wait for that retest, get in for the entry, and then go. Because it does happen more often than not. And just wanted to just say, hey guys, if you guys can subscribe, like, comment, that'd do me a huge favor for the YouTube algo. And share my link to anybody who's aspiring day trader. Show them that, this is the process, this is the journey. Someone who's a regular Joe Schmo, just like you guys, who actually did profit, who actually followed their rules and was profitable by the end of the month with a little 50K account, risking $100. This next time, I'm going to buy 2 50K trading combines. I'm going to, that's $100 investment. Pass those, pay the $300 to get them active, and then just link all these accounts and just trade $100 each account, which then I'll be risking $300 to make a minimum of $600. But I like to look for TP3s, TP4s. So if I'm risking $300 and I catch a TP4, 3, 6, 9, 12, I'll be making $1,200 on a day. That is where my what's it called? $1,000 days are going to come from. So let's say I'm risking 300 and I catch a TP 2.5. That's 750. Let's say I risk 300 and I catch a 3.5 move. That's $1,050. So it doesn't even have to be a full 3.5. Let's say I'm risking 300 and I catch a 3.2. That's 960. 3.3. I would need like a 3.5 times 300. Oh no, I didn't do that correctly, guys. I'm so sorry. Yeah, plus minus that $2 commission, I would need to look for a 3.35 R to R move, risking, $100 spread out across 3 accounts to actually have a 4-figure day. I know I can do it, guys. And I know I can minimize this big red day. I should have never done that, guys. I would have a nice little payout this next winning day if I just didn't have this day. Now, if I come in on Monday and catch a TP7 and I'm up $1,078, that's going to be crazy, right? Or $600, 6, 7, 8, 9, or TP5. That's going to be crazy, right? And I'll be able to show you guys my first payout. Once I get the first payout, I messed up last time when I was supposed to get my first payout, and I took a trade before the funds could process, and they canceled the transaction. And then I kept losing, and because it kind of psyched me out psychologically and emotionally, I kept losing, upped my size, upped my amount of trades a day, and I lost that funded account just because I wanted to get a payout, which would have been about an $1,800 payout, because at that time I had a 150K funded account, which I was gonna have a payout of. But and this account, I just want to pay myself back for this account, and then once I get my first payout, I'm not gonna trade this account, and I'm gonna buy those 2 other accounts and let the transaction process for this account so that I can actually receive the funds. And then what I'm gonna do is I'm gonna trade the combine accounts, and however long it takes, if it goes past a month but I'm in profit, I'm just gonna keep doing that and have 2 extra accounts, because I know once I get 2 extra accounts, I'm gonna really put myself in a okay position. Once I pass those combine accounts and then get a payout, what I'm gonna do is then put those accounts on the back burner and take another 2 combined accounts, pass those, and however many days, just follow the rules, right? And the wins will stack up. And then what I'm gonna do is I'm gonna get my payout on those two, and then I'm gonna link all of them together. And then I'm gonna be risking $500 to make, you know, if I'm looking for a TP4 day, I'm gonna be risking 500 to make 2,000 on any given day. Now let's say I caught a TP7 like I did this past Thursday, right? So what's 7 times 500, right? That's $3,500 for the same move that I had caught this Thursday. So what I want to show you guys and tell you guys is keep your losses small. Don't crash out. Don't get emotional. Don't think you're a loser. Don't think you're a bad person. Just know that losing is okay. Losing big like this is not okay. Losing small like these are okay. Even this one is, I don't like it. I don't even like this one, 150. So one and done. If you take an L, if you have a break-even day, wait for the momentum to push and then start dying down, and then have a limit order of where you want to enter for the long, the continuation long, or the continuation short. Now it is an hour and 30 minutes. I'm sorry, guys. Please like, comment, subscribe, and I'll have another video up later this weekend. It's gonna be about how I almost quit, and I'm glad I didn't.